welcome back to the channel. My name is StockRock. Today I'm doing a quick video on some of the results for the banks this week. The biggest banks reported their third quarter earnings results this week and pretty much crushed the earnings expectations. From investment banking rebounds to record trading revenue, Wall Street's earnings season is off to a powerful start. Let's break down some of the key numbers for the top banks, year-over-year trends, and what some of the bank CEOs are saying about the outlook heading into 2026. Stock number one is JPMorgan. JPMorgan is the largest US bank. They reported earnings of $47.1 billion, up about 9% year over year and 2% quarter over quarter. Net income came in at $12.6 billion, up 12% year over year, as the bank benefited from higher investment and steady consumer lending activity. CEO Jamie Dimon said the bank is well positioned for long-term growth. He did warn that consumer credit conditions are tightening slightly. JPMorgan raised full-year net interest income outlook, signaling confidence in stable rate-driven profits. This signaled confidence in stable rate-driven profits through 2026. Next bank is Bank of America, ticker BAC. Bank of America delivered a strong beat this quarter. Revenue totaled $28.2 billion, up 11% year over year and 3% quarter over quarter, while net income surged 23% to $8.5 billion, translating to $1.06 per share. Investment banking fees jumped 43% year over year to $2 billion, and sales and trading revenue rose 8% sequentially. CEO Brian Moynihan highlighted consistent organic growth across all segments of their business and said the bank is confident heading into 2026. Return on tangible common equity improved to 15.4%, and Bank of America returned $7.4 billion to shareholders this quarter alone. The next bank on the list, we have Wells Fargo, ticker WFC. Wells Fargo reported revenue of $21.3 billion, up 6% year over year, and came in flat quarter over quarter, with net income hitting $5.6 billion, up 9% year over year. The bank did note continued efficiency improvements and modest loan growth. CEO Charlie Scharf emphasized a strong deposit base but warned that mortgage demand remains subdued. Guidance for 2026 remains cautious, focusing on credit quality and cost control. Now on to Citibank, ticker C. Citigroup's quarter three revenue reached $20.1 billion, up 4% year over year, driven by strengthening in trading desk and investment banking. Seems to be a trend here. A lot of investment banking revenues up. Net income came in at $3.9 billion, climbing 14% year over year and 5% quarter over quarter. CEO Jane Fraser said the bank continues to simplify its global footprint and remains optimistic about capital markets going into year end. And for Goldman Sachs, ticker GS, Goldman Sachs posted revenue of $13.6 billion, up 17% year over year and 4% quarter over quarter, with net income jumping 34% year over year to $4.3 billion. Stronger equities trading and a rebound in deal making helped Goldman outperform expectations. CEO David Solomon pointed to sustained recovery in M&A and IPO activity, noted that client engagement remains strong across global markets. Last but not least, we have Morgan Stanley, ticker MS. Morgan Stanley reported a 18% year-over-year revenue surge to an all-time high of $18.22 billion, with profits soaring 45% year-over-year to $4.61 billion. Revenue in equities trading was up 35% year-over-year, and wealth management division saw record client inflows. CEO Ted Pick said the firm's diversified model is thriving in a strong market backdrop and expects trading activity and IPO momentum to remain high into 2026. Shares jumped nearly 5% after the announcement. CEO David Solomon pointed to sustained recovery in M&A and IPO activity, noted that client engagement remains strong across global markets. The bottom line, banks came in and they delivered, kicking off earnings season, with massive beats this quarter thanks to strong investment banking rebounds and resilient trading, and the IPO market coming alive in 2025. While the management team does remain cautious about credit conditions, profitability is very high and sharply trending upward across the board. If momentum continues, 2026 could shape up to be another solid year for the banking sector. Thanks for watching. This is Stock Rock. Peace.